It was another seesaw day on Wall Street while stocks closed off the lows of the session. Higher bond yields weighed on investors. Joining us now is Christian Magoon, Amplify ETFS CEO. Christian, it's good to see you. So, Christian, we had the pullback, but you say, look out, this could actually turn to a full-blown correction. How come, Christian?
Yeah, I think, the market really is digesting what's going to happen with rates here. And, we've taken a lot of cuts off the board, maybe one expected. And, data kind of is coming in hot here for the economy, which is, I think, pretty good for a long term for investor. But for investors betting on rate cuts, that could cause some more issues in the market. So while we think this dip could be a little bit more pronounced than 3-4%, maybe closer to 10%, we think this is probably a good longer term buy the dip situation because, of course, we're in a presidential election year, and some of those cycles show that the end of spring, early summer are weaker, followed by a fairly strong fall. So we think this could be a buy the dip opportunity. Could get a little rougher here, but we do think there are places to maybe hide out, for example.
Okay, so give us some of those places where people can hide out, and presumably you're talking about hiding out maybe while this correction that you see is happening.
Yeah, that's right. Yeah, and there's different kind of forms of that, right? So one of the areas that we've seen do quite well in the last month, with the S&P down 3-4%, is silver, and specifically silver stocks. So the S&P down 3-4%. We've seen our junior silver miners ETF SLIJ rally by 17%. So about a 20% performance difference just in the last 30 days between junior silver mining stocks and the S&P, really due to a couple factors. Some of it is the increased debt burden. There's been some reports out about record silver use industrially in 2023. The price has risen on silver, but there's probably, we think, more to go there given the current environment. So we think looking at those silver stocks may be a nice little way to grab some alpha here while the general equity market tries to digest kind of the future.
What about oil, Christian? You want exposure there as well?
Yeah, we think so. Oil certainly is very volatile right now, given recent events. There's a lot of exogenous events affecting oil, be it geopolitical conflicts or even some of the Cold War issues going on with the U.S. and the SPR. So we think owning oil, though, is a great thing for investors to benefit from. These higher than average oil prices, even after we've come off the peak, equal larger profits for oil, gas, chemical companies. And many of these companies are pivoting and saying, you know what, we're not going to spend all the money on R&D like we did in the past. Instead, we're going to return capital to shareholders. So they're increasing their dividends. They're doing special dividends, stock buybacks. So we think looking at a portfolio of high dividend yield, oil, gas, chemical companies makes sense. We have NDIV, NDIV, our natural resources ETF. Yields well above 5%. We think the yield could be closer to 8 to 9% with special dividends coming in later in the year. We'll have to watch earnings for these oil and gas companies to see. But again, elevated oil prices are good for the bottom line here. And in this case, it really helps with shareholder returns.
And then you guys actually run an Israel ETF, which, seems like it would be kind of a counterintuitive play right now with the geopolitical risk.
Yeah, it's definitely for perhaps a more of a longer term investor or contrarian investor portfolio. This is ITEQ, ITEQ, the Israel Technology ETF from Amplify, and Blue Star is a fund that's been out for nearly 9 years. It's averaged 9% a year, average annual returns going back to 2015, and it invests in the companies that are really innovative, that are coming out of Israel. And these are cybersecurity, artificial intelligence, clean energy, agriculture companies, very cutting edge companies that are trading at a meaningful discount right now because of several of the things. Yes, the Hamas conflict, but also before that, there was the judicial controversies in the Israeli government. And this has really pushed these companies down. Now they're above where they were as of the October 7th attacks, but we think they could be a great play for the longer term investor. If you look at geopolitical conflicts in the Middle East or Israel, investors benefited from buying the dip in Israel equities in general, and certainly even more so looking at these technology companies. So we think iTech is a great savvy way to get involved. These companies are trading at 11% discount to their price to sales ratio over the last 7 years. And again, with the portfolio averaging 9% a year going back to 2015 average annual returns, we think buying this on a dip makes a lot of sense for long-term investors who want exposure to maybe more moderately priced technology stocks and are willing to stomach some of the headline risk and increased volatility that hopefully will dissipate over time.
So Christian, silver, oil, and Israel, we're putting together an interesting portfolio.
Yeah.
I'll get you out of here with this, Christian. Give me, is there a sector though, or an asset you would avoid here, Christian?
Oh, that's a good question. So I think looking at the artificial intelligence stocks here, or their semiconductors, is something that you'd want to pare back from. They've had a great run. They've had tons of momentum, and certainly we've seen them drop off. We think breadth in the marketplace is going to broaden, and if that's the case, less money will be chasing these names, more money will be chasing maybe some of the higher quality growth companies or other sectors beyond just technology and in industries like semiconductors. So we think taking some of that exposure off and looking at other areas that are maybe more moderately priced that haven't had this type of incredible run makes a lot of sense here.
Christian, that was a great chat. Thanks for joining the show. Appreciate it.
Hey, good to see you. Thanks for having me.